Let's also bring on board then Manish Gunwani. He's joining in on the show to discuss fundamentals, head equities at Bandhan AMC. Thanks so much for taking time out. Manish, good to have you on board. Look at what the markets are up to yet again. While the private banks may be taking a bit of a backseat in today's rally, you are seeing some sort of participation by these laggards, if I may. How are you looking at the market up move, and do you believe that this record run is here to stay?
Yeah, I think we are very constructive on growth to a certain extent, but probably more on the macro stability and the consequentially the liquidity that can come to India, both globally and in the domestic area. People moving towards financialization and equities as a growth asset. So I think what is probably not being appreciated enough is uh, the macro stability of India leading to lower risk premiums for equity, cost of equity. And I think it will play out through the currency, most likely, where a very stable currency will slowly reduce the risk premium for Indian assets and thus increase the valuation. So I think that's an important element of this view.
Right. Manish, are you getting as much conviction about the small and mid cap? Seems like the first phase of correction already has begun, and we were just digging out data that, those indexes are actually off 10% from their February peak. Just wanted to understand, what is your tactical call there, if you will? And would you say take profits off the table because that's one overheated pocket in the markets right now, and maybe have a higher tilt towards large caps?
Yeah, in general, we've seen that whenever tactical corrections happen, small cap do suffer more. And obviously, if you see 1 year return, the index is up 50% plus. A lot of funds are up 60, 70%. So it'll be surprising not to get a correction, actually. But I think medium to long term, we remain very constructive on small caps because the kind of changes that are happening globally in terms of technology, in terms of the policy changes towards reshoring, towards manufacturing, towards the global shift away from sourcing from China, which obviously in certain markets will help India. So I think there is a host of things happening where very large companies may not participate fully, and you will have to go down the market cap curve to obviously you need to be selective, uh, but uh, but I do think that substantial returns will come largely from small caps in the medium to long term.
Right. Let's also talk about, some of the pockets of opportunity, and what is it that you believe are going to be some of the critical themes that will lead this? Will it be disruption in technology, the overall capex and push on power in general, or a culmination of a lot of these factors?
So in general, I think at a very broad level,
And then you'll discover it.
India can become the hub for a lot of high-end services and goods. So we're already seeing that even with listed companies struggling a bit in IT services, the global captive centers have done phenomenally well in the last 3, 4 years. We anecdotally, when you talk to companies in engineering, a lot of defense, a lot of power capex orders from the globe are flowing into India. So I think the emergence of high-end engineering-based segments, the emergence of high-end services from India, it need not be only IT. I think there are a lot of consulting, training kind of services being done from India. So I think that is leading to a situation where our current account is basically reduced to zero broadly on a structural basis. And which is why I'm saying that the outlook for the currency being stable in the medium to long term can also drive a big change in cost of equity in India. which may keep valuations quite high.
Valuations have stayed punchy for a while, and that might continue, Manish. But hi, this is Anisha joining in the conversation as well. Specifically, I wanted your view towards consumption. Last year, it was all about affluent and urban versus mass. This year, do you see the more of the same continuing, or there is a case to be made? There's going to be a bit of a reversal, and there's a bigger, alpha available in the mass segment right now versus affluent.
No, we think that finally the growth will catch up and mass consumption may come back. In fact, if you see something like two-wheelers, we are already seeing some rebound. But having said that, I think from a market viewpoint, whether consumption will outperform is something I'm not very optimistic on, in the sense that generally consumption stocks are expensive. So while mass consumption will come back, I think, but are the stocks cheap is a different question.
To the point, Manish, that you were talking about capex in infrastructure. Stepping into elections, I wanted to understand, A, what is your narrative on the entire capex theme? And B, what happens post then? If it is the continuity of the government, which seems like a likelihood, and the market also seems to be pricing in as of now, then what happens? Because, more and more then the focus would be on private capex to actually pick up. Because up until now, we've just been running on government capex push.
No, sure. So I think this is not 2002 to 2008 very broad-based capex theme, both in India and globally. Because, for example, if commodity prices are soft, you can't expect too much of capex from the steel guys, from the upstream oil and gas guys, etc. But I think there are segments, obviously, like energy transition and power, which are doing well. But I also think that when you look at product makers, especially, or someone who can cater to defense, oil and gas, etc., and it's also a bit about market share again, right? I mean, there was a lot of stuff being sourced from China, which can move to India, whether it is transformers, wires, cables, defense equipment, engine equipment, a lot of stuff, right? So I think there seems to be a fairly significant shift of that sourcing from China and other countries to India. And the good part is, in a lot of these segments, India has a big domestic market, so the expertise gets built, and a lot of the companies are part domestic, part exports. So you're just not playing only the domestic capex cycle, especially for the product makers. You're also playing this optionality that in a very big global market, they may become fairly large companies.
Manish, given that we have seen quite a bit of regulatory action on behalf of the Reserve Bank for a lot of these NBFCs, etc., I just wanted to understand your take as to how you're reading into these moves that are being taken.
No, I think I don't think this is very, very structural or with a top-down theme. It's just that some of the companies are probably having some aggressive practices. So we're not necessarily painting all NBFCs with the same brush and saying that everyone has a problem. We just think that this is a bit episodical, that some NBFCs have been asked to clean up a bit. I do think that NBFCs are an interesting place, because in a growing economy where certain pockets obviously are doing very well, and where we think mass consumption will come back, I think we think auto will do well. So anyone who's financing houses or autos, I think the asset side quality, the credit cost should be in control as long as the economy is doing well. So we're not really thinking that the entire segment needs to derate just because some of these regulatory actions have come through.
The
entire sector with the same brush. Not all NBFCs might have those regulatory challenges. But Manish, the regulatory challenges seem to be increasing for the healthcare segment as well, with the hospital stock seeing that kind of cut. Do you see this as a buying opportunity? What's the view on healthcare and pharma?
So we overall reasonably positive on pharma, not so much on hospitals. I think it's a good sector, but there's nothing really attractive in terms of valuations versus fundamental. Is there a big mispricing? At least I don't think so. The stocks have corrected a bit, but they did very well, most of them. So I think it's somewhere okay sector for us. We may like one or two stocks, but we don't really have a big position. We probably will be more excited if stocks correct further. But just when you look at the ROE versus growth versus the valuation, it's nothing exceptional to my mind.
What about autos as a whole? Two-wheeler, four-wheeler, this entire EV transition, who do you think stands to lead and gain the most from here on?
So in autos, we generally have an overweight position. So one is, of course, the cycle. So India had a down cycle in autos for a fairly long period of time, and the cycle has picked up. Hopefully, it will be a long cycle. If rest of the economy is doing pretty well, this is a consumer discretionary purchase which should do well. Now, there have been obviously technology-related issues. So there are various ways to play that. You can either play a auto ank, which has a lot of EV exposure, or you can play auto anks which are not close to the engine, so which are doing plastic parts, mirrors, etc. You can play the OEMs which you think can handle IC and EV together. Obviously, it's a subjective call which OEM can do the best job of balancing these two technologies. So yeah, but there is a lot of choice in the sector. Valuations are reasonable. The long cycle mean reversion, if it happens, I still think leaves room for some upside.
Right. Okay. Manish, great to have you on the show. Thank you so much for taking the time out.